let's have a sneak peek into the US markets. Everyone talks about India, but let's look at the US markets where there is more data to understand things. Some very interesting things are happening in the S&P 500 and Dow Jones Industrial Average, both the indices. They say bull markets always climb the walls of skepticism and ladders of worry. Fundamentally, this is happening in the US markets. Nothing rosy is happening in US markets fundamentally, but interest rates are rising at 20-year high. The country is being pushed into a recession. Inflation is going through the roof. Many other aspects of worry we hear day in and day out in the US. However, on 26th July, the Dow Jones Industrial Average closed a 13 continuous winning streak on a daily basis. In other words, the DJI index, Dow Jones Industrial Index, has closed for 13 consecutive days on a positive note that is higher than the previous day close. Want to know when this last happened? Way back in January of 1987. An event occurring once in 25 years for sure. This event needs to be given up some weightage. Now talking about S&P 500, a much broader index in the US markets, it has given 19% calendar year returns so far since January 23 till date. We have access to US stock market data for 100 plus years. Browsing through all that data, we can say that S&P 500 had given a 19% plus returns only 12 times in the first 150 days of the calendar year. More importantly, every time this has happened, the returns have been more or less maintained for the entire calendar year closing till December. Going by this data point, there is a lesser probability of the returns facing a drawdown and a higher probability of the index returns being maintained or in fact being marginally improved from the current 19%. Both the S&P 500 and Dow Jones are indicating a lesser probability of a crash. The more the skepticism in the public about the current gains, the more the equities are slated to rise.